You know the advertised interest rate on your loan, that's the number banks put in big, bold letters to make you think you understand the deal. But here's what they're not telling you. The real cost of credit is often double, triple, sometimes 5 times what that interest rate suggests. There are origination fees, closing costs, prepayment penalties, insurance requirements, and a dozen other charges buried in documents you're encouraged to sign quickly without reading. The banking system has perfected the art of hiding the true cost of borrowing, and by the time you realize how much you're actually paying, you're locked into agreements that extract wealth for decades. Let's put real numbers to this deception. A $300,000 mortgage at 6% interest sounds straightforward, right? But what they don't emphasize is that over 30 years, you'll pay over $347,000 just in interest, more than the house itself cost. Add in closing costs, $6,000, $12,000. Mortgage insurance if you put down less than 20%, $150+ monthly. Property taxes that the bank collects and holds, homeowners insurance requirements, and suddenly that $300,000 house cost you over $700,000 by the time you own it free and clear. That's not the 6% they advertised. That's a hidden cost. Structure designed to extract maximum wealth while making you think you got a good deal. Because the monthly payment seemed manageable, and mortgages aren't even the worst offender. Auto loans bury dealer fees and extended warranties into the financing. Personal loans charge origination fees that come right off the top, meaning you borrow $10,000 but only receive $9,000 while paying interest on the full amount. Student loans compound interest while you're in school, turning $50,000 borrowed into $80,000 owed before you've made a single payment. The cost of credit isn't what they tell you in advertisements, it's what's buried in fine print, calculated in ways designed to confuse, and structured to maximize bank profit while minimizing your awareness. Stick with me, and I'll expose the hidden costs across every major type of credit, show you why banks deliberately obscure the true price, and teach you how to calculate what you're really paying before you sign anything. Ready to see what they're hiding? Let's follow the money they don't want you to track. Let's start with the American dream turned nightmare. Homeownership through mortgage debt. Banks market mortgages as the responsible path to building wealth. But let's examine what really happens when you sign those papers. Take that $300,000 mortgage at 6% for 30 years, your monthly payment is about $1,800. Sounds manageable, maybe even less than rent in some cities. But here's the hidden cost structure. In the first years of your mortgage, the vast majority of that $1,800 goes to interest, not principal. In your first payment, roughly $1,500 goes to the bank as interest and only $300 reduces your actual debt. You're paying to borrow their money, not to own your home. The Sabio Observer recognizes this front-loaded interest structure as deliberate extraction design. It's called amortization, and it's engineered so that banks collect their profit first. If you sell the house or refinance after 5 years, which most people do, you've paid tens of thousands in interest while barely touching the principal. The bank wins, even if you don't complete the full 30 years. But it gets worse. They don't just charge interest on the home price. You also paid closing costs, loan origination fees, often 1% of loan amount, appraisal fees, title insurance, attorney fees, recording fees, and a list of charges that add $6,000, $12,000 to your cost before you even move in. These aren't negotiable. They're requirements of the debt system. Then come the ongoing hidden costs that make the true price explode. Private mortgage insurance, PMI, if you didn't have 20% down, typically $100, $200 monthly for years. Insuring the bank against your default while adding zero value to you. Property taxes collected by the bank and held in escrow, you're paying them. But the bank controls the money, and sometimes earns interest on it while you don't. Homeowners insurance with coverage requirements set by the bank, often higher than you'd choose, adding $100, $200 monthly. By the time you factor in all these hidden costs over 30 years, the $300,000 house genuinely cost you $700,000, $800,000 in total cash outflow. The 6% interest rate was marketing. The real cost of credit was more than doubling the price, and they structured it this way deliberately because if you saw $800,000 total cost up front, you'd never sign. But a $1,800 monthly payment feels manageable, even though it leads to the exact same financial devastation. And mortgages aren't alone in this deception. Now let's expose how auto loans hide costs even more aggressively than mortgages. Because car dealerships have turned the financing process into a fee extraction circus where the advertised price bears almost no relationship to what you actually pay. You walk into a dealership, see a car for $30,000, and think that's the negotiation point. But by the time you drive off the lot, you've signed papers committing you to pay $45,000, $50,000 over 5 years, and most buyers can't even explain where the extra $15,000, $20,000 went because it's buried in a mountain of hidden costs and manipulative financing structures. Here's how the con works. Dealers separate price negotiations from payment negotiations deliberately. They'll ask, "What monthly payment are you comfortable with?" rather than discussing total cost, because they can manipulate the numbers to hit any monthly figure by extending loan terms, hiding fees, and padding interest rates. That $30,000 car at 7% for 60 months should be about $594 monthly. But they quote you $650, and where does the extra $56 monthly go? Into dealer markup. The interest rate the bank approves you for is maybe 5%, but the dealer adds 2% and pockets the difference as profit. Over 60 months, that markup alone costs you $3,360 extra, pure profit for the dealership that you never even knew was negotiable. Then come the fee avalanche. Documentation fees, $500, $1,000 for paperwork that costs them $50 to process. Dealer preparation fees, they charge you to prepare a car for sale that should already be sale-ready. Extended warranties sold at 200, 300% markup that you probably don't need and rarely use. Gap insurance to cover the difference between what you owe and what the car is worth if totaled, because they know you're immediately underwater on the loan. Paint protection, fabric protection, theft deterrent systems all sold at massive markups, all financed into your loan so you pay interest on them for years. By the time they're done, you're paying $45,000 for a $30,000 car, and they've structured it so you're focused on the monthly payment. $650 seems reasonable, rather than the total cost of credit. The banking system and dealerships work together in this extraction. Because dealers can't survive on car sales alone anymore, they need finance profits. And your lack of awareness of the true cost is their business model. But at least with cars and houses, you get something tangible. With student loans, the hidden costs are even more devastating. Let's talk about the most predatory hidden cost in modern lending. Capitalized interest on student loans that turns borrowing for education into decades of debt servitude. Here's how this particularly evil mechanism works. You borrow $50,000 for college over 4 years. While you're in school, interest accrues on those loans even though you're not required to make payments. At 6% interest, that's about $3,000 per year accumulating. By the time you graduate, that simple $50,000 loan has grown to $56,000 through capitalized interest added to your principal balance, meaning you now owe interest on the interest. The Sabio Observer recognizes this as compound interest working against you instead of for you. And it's the most expensive hidden cost in the credit system. That $6,000 in capitalized interest isn't just added to your balance, it becomes part of your new principal, and you pay interest on it for the entire life of the loan. Over 20 years at 6%, paying the standard payment, that original $50,000 borrowed becomes approximately $86,000 paid. But here's the truly hidden cost. If you can't afford the standard payment and go into income-based repayment or deferment, the interest keeps capitalizing. People who borrowed $50,000 for undergrad often end up owing $80,000, $100,000 because of compound capitalization, and they don't understand how their debt grew when they didn't borrow more. And the predatory structure gets worse. Student loans come with origination fees, typically 1% of loan amount, charged up front, meaning you borrow $10,000, but only receive $9,900 while paying interest on the full $10,000. Deferment and forbearance sound like helpful options when you can't pay, but interest continues accruing, adding to your balance, creating more debt. Refinancing options exist, but often require giving up protections like income-based repayment, creating a trap where the cost of escaping is too high. The average student loan borrower pays double what they borrowed by the time they're done, and many pay triple due to these hidden costs. The financial elite send their kids to college debt-free and understand that student debt is wealth extraction from the young. But the debt crisis continues because the cost is hidden until years after you've signed, when you're trapped in payments that consume 10 to 20% of your income for decades. The cost of credit isn't the interest rate. It's the compounding, capitalization, fees, and structures designed to maximize extraction while minimizing your awareness until it's too late to escape. So there it is, exposed across every major form of credit. The real cost is always hidden behind advertised rates, buried in fees, masked by payment structures, and compounded through mechanisms designed to confuse rather than inform. Your $300,000 mortgage actually costs $700,000, $800,000. Your $30,000 car costs $45,000, $50,000. Your $50,000 education debt becomes $100,000 owed. The banking system isn't transparent. It's deliberately opaque, because if you knew the true cost up front, you'd make very different decisions about whether to borrow, how much to borrow, and what terms to accept. Now you face the critical question. Are you going to keep signing credit agreements based on monthly payments and advertised rates, letting banks hide the true cost until years later when you've already paid tens of thousands? Or are you going to demand transparency, calculate total cost before signing anything, and make borrowing decisions based on reality rather than marketing? Because every hidden fee, every capitalized interest charge, every front-loaded payment structure that's wealth flowing from your future to the banking system's present profits, and they depend on you not doing the math. Here's your assignment this week. If you have any form of credit, mortgage, auto loan, student loan, personal loan, anything, dig out the original paperwork or access your account online. Calculate the total amount you'll pay over the life of the loan, not just the remaining balance. Add up all the fees you've paid, origination, closing costs, insurance premiums, everything. That number is the real cost of credit, and I guarantee it's shockingly higher than you thought. Write it down. Confront it. Then ask yourself, would I have made the same decision if they'd shown me this total up front? And if this video exposed the hidden cost structure that banks depend on, you never calculating if you now see through the advertised rates to the real extraction mechanism, subscribe to this channel and hit the notification bell, because the next video continues our journey through the debt system. I'm going to expose how credit scores are used to control you, how the 3-digit number determines your access to credit and jobs and housing, and why the entire credit score system is another tool of financial control disguised as objective assessment. The hidden costs are just one weapon in their arsenal. Understanding all of them is your only defense.